This is Chip Maxwell, and you're listening to the Retire Smart Podcast with David Brooks. Join us as financial advisor Brad Starken discusses the latest in digital assets. We'll cover Coinbase joining the S&P 500, the rise of stable coins for efficient cross-border transactions, and how mainstream investors can gain exposure to cryptocurrencies through ETFs. Plus, learn about our upcoming class on digital assets and blockchain technology.
In the studio joining me now is Brad Starken, our resident authority on all things crypto and digital assets. How are we doing?
Doing great. Thank you for having me.
Man, glad to get you back in here. So we've had some big news. The Coinbase, which is something we've talked about, is the most, reputable exchange still out there where people are buying and selling these digital assets. But that actually got added as a publicly traded company to the S&P 500. That's a pretty darn big deal.
Yeah, big news there. That actually happened on May 19th of this year. That's the first of its kind in the space to join the S&P 500.
But I think you told me before we started, it's basically the stock is literally just flat for the year. Is that right?
Yeah. So year to date, pretty much flat, maybe up just a percent or so, but just in the last month, up about 25%. So certainly when you get added,
hit pretty hard, but obviously getting added was pretty big news. And just to understand, when a stock gets added to the S&P 500, all those index funds, mutual funds that track it, have to buy the stock, so that usually gives a pretty good lift. So
that's right.
All right, so that's some pretty big news. We also have some news on the front of stable coins, right, are coming to the forefront of the news. So you can kind of explain what a stable coin is. Basically, it's almost like a money market, what it would be for cash, right? It's just you're parking in and locking in a dollars for a dollar value. Is that right? Stable?
Yeah. So typically it's going to be backed by some sort of currency, like the USDC right now. It's a 1-for-1 back of a US dollar on the backside. But the way you're able to transact that is what's really interesting, with being able to move money across, borders internationally, things like that, at literally pennies on the dollar, which is way more efficient
and
than our
lightning
Swiss system.
fast.
Yes.
Like if you wire over $1 million, you have to go through all the anti-money laundering training we have to do, right?
Yep.
So, but now you'll be able to do cross-border transactions instantaneously. And I think it's the founder of Stripe, who's from Ireland, a pretty smart tech guy. He talked about it. I think it'll cut the expense by 50 times.
Yeah.
So from 3% to a fraction of a percent.
Yeah, it's just making everything so much more efficient, so much more quick. It's very interesting technology for sure.
So you're telling me I'll be able to transfer money, as I just did before we started this segment, to my son, even quicker and less expense. That's fantastic. All right, so let's just talk about how Main Street people can learn about cryptocurrencies, digital assets. If they've never heard anything before, you teach a class, right?
Yes.
And we've got one of those coming up.
We do. So that class is going to be on Tuesday, June 24th at 6:30 p.m. here at our office in the Midwest Learning Center. But ultimately, you can go do your own research on the internet, online. It's ever-changing. It's a very, very rapid-changing class that we're putting together. I would say most of the information that I covered last year actually had to take about half that out of our presentation because it's just simply not relevant anymore.
It's moving fast. Obviously, this newer administration, the Trump administration, is very pro-crypto, I would say, compared to the last one, right? And
definitely.
Not only that, you have the blessings from the SEC. So, the SEC, we were talking about the stable coins a minute ago. It was called Ripple, XRP. That was a lawsuit for many, many years where it was just, hey, look, we're just valuing something against the U.S. dollar. What's the problem? And the SEC, the former chair, went against them. The SEC lost, and, stable coins prevailed. So now you have a pro-crypto person heading both the SEC and the Trump administration, David Sachs, who's the crypto czar, who's of the All In podcast fame, a self-made billionaire. He's the crypto czar, and he's pushing hard to get this to become mainstream. So how do we help our clients get exposure to these things? So we're not buying the actual cryptocurrency, but we do have exposure now for our clients.
Yes. So that would be inside of an ETF or an exchange-traded fund. There's a handful of different companies that have those approved. Right now, there's only 2 approved for Bitcoin and Ethereum for the digital assets that are out there, the cryptocurrencies. And that's that's a pretty easy way to get exposure. Other companies will actually custody your assets for you, versus if we talk about this in the class, where if you were actually to go out and buy it yourself on Coinbase, if there's no such thing as, forgot your password on some of these keys and things like that, and then you're putting yourself at risk for either hacks, or if you take that offline, if you lose something, if you lose your basically your hard drive.
We have a member of our crew here that bought 4 Bitcoins when they first got married, her and her spouse, and they can't get to them, and boy, they wish they could. Their house would be paid for, the kids' college would be paid for, because I think they bought them for $200. And what's Bitcoin up to? Didn't it hit? It's hit a record high since you were last year.
Yeah, since on the last show, it did hit a record high about a month ago, about 110,000, and we're approaching that again here right now. So a very volatile space. I think it's very interesting. I would say also one of the interesting things is what everyone continues to call for in this space is they actually want more regulation. Typically, a lot of industries say they want less regulation, but just because this is in its infancy still of only really being around for 14, 15 years, there needs to be more regulation for this to continue to move forward.
And we don't want overreach, but I'm one of those that called for regulation. We just want to know the rules, right?
Exactly.
Because it was so confusing between what the IRS said, the SEC said, and then the Department of Labor, et cetera, on transacting in these currencies, which if you can call them a currency, I always joke, if something can move 40% in value from the time you leave your house to the car dealership, I don't really think that's a stable currency, but it is becoming so much more mainstream, so much more viable. In fact, Ethereum is the one that I had the biggest investment personally in, and I got rid of most of mine at the start of the year based on the valuations and pushing it into a new tax year. But that one's had a lot of volume here as of late, right?
Yes. So certainly, once again, that one's down year to date. It's been very volatile, but actually over the last 7 weeks, we've had 7 straight weeks of inflows into the Ethereum ETFs as a whole. Last week, over $281 million just adding into those ETFs for Ethereum as a whole.
Now, we don't have a lot of time to get into it today, but Ethereum is one of the prominent ones where what we call smart contracts will transfer, right? So we can transfer value. So supply chain management will get disrupted, accounting as the price. If I bought this mug from China, everywhere it went, the monetary value of it changes with it using smart contracts, right? So that's why this stuff is so prevalent, where Bitcoin is not typically used in those things. That's more of a store of value. That's more of the digital gold, if you will, right?
That's right. So there'd be some higher transaction costs within Bitcoin if you were to send money along the way. And I guess my bad joke is, if we're going to the gas station, you're not shaving off pieces of gold to get gas, right? That's just not feasible. That's not how we transact money. More than likely, Bitcoin is not going to be the way of actually day-to-day transactions. I believe some of these others that are coming up have that ability to do that.
Very good. So lots to come, lots more to find out from the government on how they transact this, but it's definitely something you should be paying attention because digital assets are here to stay. Now, I would caution anyone, we're not making any recommendations when we talk about specific cryptocurrencies, et cetera. We don't actually purchase these on behalf of our clients. Both Brad and I are personally invested in some of these things at our own risk tolerance, if you will.
Yes.
But it's not for the faint of heart. You need to understand it before you go hog wild. But we do have very, very small exposure using high quality exchange traded funds from companies like Fidelity on the top ones. Now, the newest exchange traded fund to launch. Let's talk about that. What is that?
Yes, so that would be XRP or Ripple that you were just mentioning about. That there's some people or some ETFs in the works that are actually getting reviewed right now to see if that'll be the next one to launch. So right now it's just Bitcoin and Ethereum are the ETFs that are available to the public. That one's in process with Wisdom Tree right now and actually getting reviewed. Maybe that gets approved, maybe not. But typically, someone will rework the language, and at some point, once one gets one through, then all the other companies follow suit.
Well, and these bigger companies, when they're putting out these ETFs, they are acquiring the cryptocurrency. So some ETFs, and I guess I would just say word of caution if you're trying to even buy one of these ETFs on your own, which would sometimes seem more safe than even buying the cryptocurrencies. Are they tracking the price of it, or do they own the underlying asset? Right,
Exactly.
The big distinctions. Can you talk about that?
Yeah. So each ETF that's out there is going to be a little bit different. So Fidelity is typically the one that we're gravitating towards. They actually been mining Bitcoin. Fidelity as a company since 2014. They understand.
I was in their headquarters in Boston. I guess it's been a year and a half, and literally they showed us the original mining machines they'd built, and it's kind of wild. And they have them in these glass bottles bubbles, but they even look archaic compared to the computers that they showed us the server farm they've built to do it today. They're serious about it.
Yeah. So just with that experience and them understanding all the different layers of that and being in that space themselves for 10, 11 years, that's why we like trusting them versus some of the other companies out there like BlackRock are technically not custodying theirs. It could be relying on Coinbase and others. So, just from a security standpoint, we're doing a lot of research on the back end for all of our clients for sure.
So if you want to learn about cryptocurrency, how the values on these things may move up or down, why they'll do that, and the usefulness of their technology, most commonly called blockchain technology, and how valuable it is, you really want to attend this class. So when is this class again?
Yes, so that'll be Tuesday, June 24th, 6:30 p.m. at our Midwest Learning Center.
All right, but you do need to register. You can call the office or go to the events page at retiresmartnow.com. Brad, we are out of time. Thank you so much for stopping in.
Thank you.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week.